Investors and traders, welcome to the channel Market Chart Pattern. In this segment, we'll be taking a look at the key US banking stocks that we have been following and also the key ETFs for these banking stocks. This video is for educational purposes only and it is not a financial advice. So guys, if you have been following this segment for quite some time, we have been looking at the Spider S&P 500 regional banking ETF. This is the ETF which also contained the SVB, the Silicon Valley Bank. And here what we can clearly see is that there has been a distinct pattern of a downtrend starting from the beginning of 2022. That's also when the broader stock market started a bear market. And in fact, one of the things to note in this is that 13th of October 2022 was a significant low in the broad US stock market, which has not been taken out as of yet. And what we can see in the especially in this regional banking ETF is that at the beginning of this year in January, around that ballpark figures of 3rd of February 2023, it formed a double top formation with the resistance on the left hand side, and then over the course of next few weeks we have seen a crash scenario because of the Silicon Valley Bank blowing up. And then what we have seen since then is this consolidation taking place, and that is in my opinion because of the massive liquidity, well, not really massive but a significant liquidity injected by the Federal Reserve. They created a new scheme, and what they have done is they have injected about $300 billion in the banking system. And of course, the US Treasury has been helping with this situation as well. And what it means is that, we had these levels of about 78.6% Fibonacci retracement of this entire, low to high. This is the 2020 low to the high back in 2022. Coming in around $38 per share level. The 61.8% retracement comes about $47 per share, and then we had about the 1-to-1 projection ABCD at $46 per share level. So it's been in that ballpark figure of the support zone, that pretty wide zone to be very honest. But look at the volatility that we have seen. So here things might be looking to stabilize a little bit, and I don't know whether this is going to be something which will continue like this or there could be further cracks in the banking system. But as long as the Federal Reserve, with the help of the Treasury, is able to keep the system liquid, then the downside perhaps could be capped. But we will be really carefully watching this. So this is what is happening. Look at this sharp declines. This is when the Silicon Valley Bank news began to come out in early March. And then over the next few days, of course, the bank went belly up and went bankrupt because of the run on the bank. So guys, now what we're gonna do is we're gonna take a look at the XLF. So this is the daily chart of the Spider Select Sector Fund. And guys, one more thing is I'll just remind you, just a disclaimer, that this video is for educational purposes only and it is not a financial advice. And here what we have is a rally which took place from this brown line, which we had identified as possible support level. So far this is what it has done. And if you have been following this segment for quite some time, you will note that we did say that we were expecting a rally to come in the banking stocks, and from the fundamental basis, the reason was the liquidity which is coming into the system, and also that was going to help the broader stock market as well, the US stock market. And we have also seen the stocks in general rally, although in a big way dominated by certain 5, 6, or 7 stocks, and which we'll cover in another segment later on today. So guys, what is happening now is that after finding support from this level of 30.38, the index, the ETF has been able to actually take out the 38.2% Fibonacci retracement, which is a good sign. And it's possible that it goes and actually test the 61.8% retracement, which comes at around $34 per share level. Now, one of the things that we really look at here in our channel is the concept of symmetry. So here what we have is, guys, here in this BC leg, this was the highest rally which took place, and what it has done is, if this rally which is taking place needs to have legs, like a really strong foundation, then we would be looking at this symmetry, which I'm going to call a bearish symmetry, because the price had been moving lower, to be broken. So that's going to give us really good indication. So this level comes between the 78.6% Fibonacci retracement, the 61.8% Fibonacci retracement. So if the the ETF begins to close on a consecutive daily basis above $35 per share level, then this bearish symmetry would have been broken, and we could actually begin to look at the structure in a different way, and we could actually begin to look at for higher prices, and this could have been a bottom formation. In fact, it could have been a double bottom, maybe even triple bottom, in context to this left hand side right here. If this brown line at 30.31 is broken to the downside, then what it means is that we are looking at a formation of 1-to-1, this ABCD, which could actually take us much lower, and we have this 78.6%, 61.8% Fibonacci retracement coming at $26.75 level, and the ABCD actually takes a little bit lower to around 25.50 level, and that will be the kind of structure that we'll be looking at. Of course, we'll take things one by one, and we'll have to see whether in fact this low will get taken out or not to the downside. Let's take a look at certain stocks, the key banking stocks that we follow. So this is the JP Morgan. So JP Morgan had some good news coming out in terms of the earnings, and we have seen a big gap up. Now the stock had actually been trading around the 38.2% Fibonacci support level for quite a while. It was just consolidating here. This is something which we had pointed out, and having a big gap up is actually a kind of a good thing, but also expected, because the support wasn't the support had held. Now what it is doing is, in fact, it's just been in a trading range, and it is actually testing the upper end of the trading range. It really needs to move above this 145.50 level, which is 61.8% retracement, to be able to break this structure, and then we can say perhaps it formed like a higher low, and this was the low, and maybe the stock is moving higher, but till then there's a possibility that this 38.2% retracement and this low might actually get taken out, and then we have the support at $117 per share level, and then the bottom comes around 101.25. And if the stock is really bearish, then there could be a scenario of an A, B, C, D, which could actually take the stock down all the way, testing the March 2020 lows, the COVID lows, and that's where maybe that might be a good bottom for the stock. But what we do here is that we take one thing at a time, and we'll be just watching these price levels really carefully, and we'll be looking at this together, and of course you guys will be informed as we make the videos. Let's take a look at Goldman Sachs. So there we go, guys. Goldman Sachs, I believe, also came up with good news. In fact, when the news came out, the earnings news right here on the 18th of April, it had a bit of strange kind of a price reaction, because there was a big gap lower for the stock, and then it recovered to close higher. This is a really good indication that buyers stepped in and they started to buy the stock, and there is strength in the stock. So in fact, what we look at is from a pattern formation, you know that the stock had found support at the 78.6% Fibonacci retracement of this leg here, this one, this to this, and which is good. And after forming this high, excuse me, finding the support here, what it is doing is it is testing this trend line here, downward trending line, and it appears the stock is also actually moving in some channel formation right here. Something really important to look at is this bearish symmetry. So in this leg, the stock had actually, this is the largest rally it had before, and it is approaching that level again. So the stock really needs to, in my opinion, clear above $355 per share level on a consecutive closing basis, to be able to mark that okay, the stock might have turned to the upside. Until and unless that, the pattern formation possible is also this ABCD 1-to-1 formation, which could take us to move into this $242 per share level, where we have pretty strong support coming in because of a confluence of pattern formation and Fibonacci retracement coming together. So that also remains a possibility. So again, we are watching whether the stock is actually going to break this bearish symmetry, also begin to close above this downward trending line, which will break this channel, and it's possible it goes up to about 61.8% Fibonacci retracement, find some resistance there, comes back and tests the channel one more time, and that might form a higher low, and off it goes to the upside. But again, we'll be watching this and making videos, and we'll take a look at the price action together. Let's take a look at Morgan Stanley. So the Morgan Stanley stock has been one of the strongest stocks within this banking key stocks that we follow. What we can see is that the stock has been actually moving in this channel formation. We had pointed out this 1, 2, 3 pattern where it has found support here, forming higher lows, so that's good. Also, the stock broke above the 38.2% Fibonacci retracement on a consecutive daily closing basis, so that's good. Here at the moment, I don't really see in this one a proper bearish symmetry, which is a good sign. And what we could possibly look for some resistance to come in is that this expansion of this leg here, that comes at around $92 per share level, so about 92.25, and the 1.618 comes at $95 per share level. So what perhaps the stock could do is, if the momentum is quite strong, it might just go and test this resistance level pointed in this highlighted shaded area. That is one possibility. So this is what we are looking for in Morgan Stanley at the moment. Let's take a look at Citigroup now. So the Citigroup stock is just one of the weakest in the banking stocks that we have been following, and in fact, this one also had a rally, so that's good. However, if you compare it to some of the other banking stocks, you can see this rally. It already had two consecutive daily moves lower, and what we are looking at, this pattern formation in the yellow shaded area. We have this trend line coming in as a possible resistance here, and also what this stock did was it hit the 78.6% Fibonacci retracement of this segment here. So this and this, so this, I'm taking this high because this one is pretty much the same. It was a negative candle and closed lower compared to this one, so these are pretty much in line, very little difference. And it appears that the stock, if it is strong, it really needs to go close above $54 per share level to be able to say, okay, maybe the structure has changed. Maybe it might go and challenge these highs around here and find resistance in a double top formation. But looks like this stock is gonna find resistance if it is trying to move higher. Let's take a look at Wells Fargo. So the Wells Fargo stock is a very interesting one. Quite a while ago, about a year ago, I had done a video at the beginning of around or towards the end of 2021, in fact. And we were looking for a pattern formation where we're looking for some sort of a top to form around here. Market did enter this strong resistance level, move lower. However, there was one high, and that was the final high. Higher made a higher high, and ever since it's just been moving lower. So guys, here the thing to watch is this. So we have a pattern formation in which we could have a one-to-one move lower, so A, B, C, D, which could in fact take us down to around anywhere between $29 to around $26 per share level. What we have seen is actually just like the other banking stocks that we're watching since March, in this case late March. The stock found support from this 61.8% Fibonacci retracement, and it has had a rally. One of the key things that we look at is the bearish symmetry. And if we look at this rally, which had taken place between 22nd of December to around early part of February, it was of this much magnitude, shown in black line. If we take this, we move it around here, so this rally was similar. We take this rally was pretty much similar as well. The stock did go a little bit above higher, but it wasn't able to sustain that. So what it means is that if this bearish symmetry is to be broken, then the stock needs to rally higher than this and close on a consecutive daily basis higher than that, because the stock had been weaker and been selling off for quite a while. In fact, I think the really good thing for us to be looking at would be to, in fact, whether it's able to take these highs out. So getting above $49 per share or $50 per share, I was showing really good signs of strength. Would be an idea to look at this stock. Otherwise, if this 61.8% Fibonacci retracement, acting as possible support for now, goes away, then we have this one-to-one formation which could actually take the stock move much lower to the levels of $29 per share level to even $26 per share level. So guys, this is what we're watching. Do excuse me that the video is a little bit long, about 17 and a half minutes. Do apologize for that. I'm based in the UK, and today we had an alert coming from the UK. You can Google about that. It was a pretty horrible sound, and I'm a little bit shaken just because of that. In fact, I was making a video and I was interrupted, so that actually has had some impact on my chain of thoughts. So do apologize for that, and apologies for such a long video. So guys, if you like our analysis, how we look at the markets using pattern recognition, using Fibonacci retracements, please do subscribe to the channel. And if you find the video of educational value, then please do hit the like button. I really appreciate it. Thank you very much. Good luck and good trading.